Welcome back to the channel. In this video, I'm going to break down the best 5 index funds for long-term investment to accumulate wealth over time. If you've been a member of my channel, you know over 845 videos, 6,000 subscribers, you will see I've made multiple videos on index funds and ETFs. I'm going to give you the best. This is what you need for a long-term 20 to 30 year investment horizon. Let's get right into it. Disclaimer, Trading Simplified is for educational and information purposes only, and don't be confused with financial, legal, professional advice. Always do your own research before buying and selling products. Now let's get right into it. Let's start off with the best index fund to own, Fidelity 500 Index Fund, ticker symbol FXAIX. This is special for many reasons. Let's get right into it. If you are a newer investor, the S&P 500 should be your main backbone of your portfolio. Let's look at the top 10 holdings. You get big companies like Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Tesla, and Berkshire Hathaway. These companies make up 37% of the portfolio. In FXAIX, you have a total of 507 holdings, which is, I'm going to break down the highlights for you with FXAIX and why I think it's such a powerhouse. The lifetime return of this is 11.25%. Looking at the last 3 years, Fidelity's FXAIX has made 19.52%. Let's review the composition one more time. Looking at the information technology, 33%, financials, 13%, consumer discretionary, 10%. Take a screenshot of this. You are in domestic equities, which means you are in US companies only. One of the reasons why I love this for long-term growth is look at your expense ratio. You are at 0.15 for every $1,000 invested. So what that means is if you invested $1,000, you would pay a 15-cent fee. That is a very tiny fee when you compare this to other index funds. Let's get into number 2. So now index fund number 2 is going to be outside of the US, the Fidelity Total International Index Fund, ticker symbol FTIHX, currently trading at $17 at this time of recording. Year-to-date returns highlighted at 26.58%. The life of the fund has grown 7.77%. This is a fund that's going to diversify you away from the United States. When you're investing in this, you are getting a good composition away from the United States. You are getting developed value and growth at 61%, small cap at 7%, and you're getting a mix of the emerging markets. The reason I like this index fund is because you are getting international diversification, which is needed for a long-term growth accumulation of wealth. You need to think outside the box, and when you buy FTIHX, your top 10 holdings are Taiwan Semiconductors, Tencent, ASML, Alibaba, and the list goes on. But you get 5,091 holdings, which diversifies you. And let's see where your money is diversified with each country. Japan at 15%, United Kingdom 8%, Canada 8%, China 8%, France 5%, and the list goes on. What's more important to me is the fees and distributions. To get this $5,000 equity diversification, you are paying 60 cents for every $1,000 you have invested, which is a 0.06 expense ratio, making it at the top of my list. Let's get into index fund number 3. Fidelity Small Cap Index Fund, ticker symbol FSSNX. This is a small cap diversification mimicking the Russell 2000. Your hypothetical growth 2016 of a $10,000 investment would be worth $23,000 today, and you have a low fee of 0.025%. Let's look at the composition of this. You are getting top 10 holdings only make up 3.7% of the total portfolio, and you are getting 2,000 companies to diversify you and protect you for the long-term investment. Some of the companies notable worthing is IonQ, Hims & Hers Health, Health Equity, Enzyme Group. These companies all have a market value that is below $2 billion. 19% makes up financials, industrial 17%, healthcare 15%, information technology at 14%. What I like about this index fund long term is you will not get chopped up by fees. You are paying 25 cents for every $1,000 you have invested, so you can invest your money, invest into small caps, and get that diversification you need for your portfolio long term. Index number 4 that you need part of your portfolio is Fidelity's Midcap Index Fund, ticker symbol FSMDX. This gives you that mid-cap exposure. So we hit the small caps with FSSNX, we hit the large caps with FXAIX, and now we're going to focus on United States mid-cap funds. You get the same expense ratio at 0.025%. Let's look at the composition here. You are getting a total of 815 holdings as of August 31st, 2025, the time of this recording, and only 5% of the total portfolio makes up the top 10 holdings. So you are getting a good diversification. You're getting another 815 holdings that invest in the United States primarily. Looking at these guys, the companies must have a value between $2 billion and $10 billion invested. That qualifies them for the mid cap. And just to review, 25 cents for every $1,000 invested, knowing that you are getting that long-term capital growth. Let's look at performance of these guys. The Fidelity Midcap lifetime earned 12.4%. And then the last 3 years, 13%. Last 5 years, 12%. And the last 10 years averaged 10%. So overall, this mid-cap Fidelity FSMDX is earning you growth and you're paying low fees over time. All right, the last fund is an ETF. It is ticker symbol SCHD. It is a dividend-based equity ETF. And what this is going to allow you to do is to get that diversification that is away from technology companies. And that is why I like this as your fifth holding that will earn nice dividends with long-term growth appreciation. SCHD has a total of 103 companies with it. The top 10 make up 41%, which is more diversified because we have plenty of diversification with the first four index funds we chose. Now looking at it, Chevron leads at 4%, ConocoPhillips, MO, Atrial Group, Pepsi, Abbey, Home Depot, Merck, Cisco, Texas Instruments, and Verizon, which all pay dividends. What you need to see when you look at the dividends and distributions, you are getting a dividend yield of 4.74%. So that is excellent when you're holding it. And you don't have to worry about the expense ratio because it is 0.06%, which is 60 cents for every $1,000 you have invested. Checking out the performance of SCHD, if you invested $10,000 in 2014, it would be worth $30,000. Just to compare that, the life of the fund has earned 12.6% compared to the S&P 500's 14.93%. If you made it this far, please hit that thumbs up button, share this video. I appreciate it. Also, consider checking out the links, whether you want to join the WHOP and join a community of traders that day trade. You want to join the free Discord to get your feet wet, you can do that. And you also can become a YouTube member if you want to support the channel. Appreciate that as well, guys. You have referral clubs for starting Gemini Crypto, Robinhood Portfolio, and also TikTok if you want to see me on there. Definitely check out the free playlists. Appreciate you guys tuning in. I'll see you next time.